Right, so quick recap of all what went on today then. I came to the market for the CPI data. I didn't feel that there was much point being here before it. So I wasn't looking at the currencies today. I was looking at gold, stocks, and oil due to the timings of the CPI data and the cash open, an hour before the cash open on Wall Street. So instead, we traded gold and oil. I couldn't get an opportunity in the stocks um, because it was too. It was Nasdaq and gold were too correlated. So my approach today was one that, because there was such a huge move on the data itself, the question was how much further can this go? So as you can see, basically, I took positions in gold and oil, and I put my positions on. I took an initial loss on gold at a full R, which is 0.5% I'm risking. Um, and my approach was to scale out of the position as we sort of moved towards the longer target, noting where the market could fail along the way, and trailing the stop. So taking money off the table and trailing the stop was my approach. In hindsight, of course, um, it might have just been better just to stick with it. But it's a new strategy that I'm learning here from Stacey Burke, and taking things slowly, one bit at a time, and learning as we go. So that was the approach. Um, now, so tallying everything up, we are basically 4R up on the day, split between gold and oil. So we took an initial loss of 1R on gold, and we made everything back on the oil and subsequent trades in gold for a total of 4R. So running through gold, first of all, in a previous video, I had drawn up a bearish thesis, and that's purely on the price action at the time and not taking into consideration the CPI data. That is not to say that I didn't start out the week with a bullish thesis for gold. At the start of the week, I write an analysis for FX Street on the analysis page. It's a weekly analysis. It always comes out before the open of the week on a Sunday or Monday if you're in Asia. And I talked about how the bulls were pushing up against a key resistance ahead of the US CPI data. I spoke about how things could be at a turning point on the weekly charts with the double bottom, triple bottom, and with a target of breaking the trend line, etc. I mean, you can go to the website and read the article. Just look up the title. You can see it there. Now, we talked about the harmonic pattern that was on the chart, the daily charts. So I called out this. Anyway, so this is all behind us now, but that is just to give an explanation of why we're now moving higher. And we've broken through that barrier of 130 on the CPI data today, which puts the bullish thesis on the weekly chart well into place. So that's all there to be seen. Yesterday, based on the movements and the price action before the data, I talked about how we could be heading into the trend line based on the imbalance and so forth. This can all be shown here. It's on soft US Treasury auction. And again, this was before the CPI data. So had the CPI data come in line, or even surprise to the upside, obviously this would have played out as a gold bearish scenario. So heading over to real-time charts, we did respect that trend line, which was drawn here. We just didn't meet it in a steep fashion. We just sort of crept over towards it over the course of the Asia and London sessions. So we respected that trend line that was drawn on that analysis. In any case, the CPI came out. We'll just move down to a 15-minute chart for that. And we took off. So we waited for the close of the 15-minute candle, and we entered on the next 15-minute candle. Now, how do we do that? We did that on a micro basis on the 1-minute chart. So the initial trade taken was a loss. The market at the time was coiled. The market at the time was coiled as followed, and we ran into the money to begin with, and it failed. Now, my mistake was trying to exit before the stop loss, and the stop loss was well placed just below that wick, and of course, lo and behold, it moved back up. So that was a human error. I shouldn't have done it. Nevertheless, it broke the trend line. It gave this railroad track 3-line strike, and I thought, silly me, I was too premature to try and get out of that trade and save a fraction of what I was losing. It was pointless anyway. So yeah, put my hands up to that one, and instead I re-entered the market on the basis of the break of the micro trend line, and I thought, well, this could in fact be a grind higher, and that's essentially what we got for the rest of the day. So nice trade, and that was where my eventual take profit was, right at the top. So that was essentially, the target was based on the coil. So what I did is I drew a, well, before we get there, let's look at these. So as I said, I wasn't sure how this was going to pan out, so I was micromanaging it, and I took profits. So there was the buy. So there was the first buy and the loss. There was the second entry, and this is where I was micromanaging it, taking bits off at a time where I perceived, so 3 occasions, where I perceived to be risks of failing, because we'd already seen like double the ATR of a 4-hour session. No, triple, sorry, and double of the daily. So, I mean, this was a huge move. $40. You don't see that every day. So, given the the grind that this there was no real, even in the cash open, it was just a grind. So I was nervous to hold on to the position really in total, in its entirety. So I was taking bits off the time, and you can't get poor taking a profit, I don't believe. So there we are. And what was the target based on? The target was based on the consolidation and essentially a 1.5 expansion of that consolidation. So it's taking money off at double, and I was taking money off as well here below the 50, the psychological level, based on a daily target. These wicks. Um, so I took money off at the wicks and then let a very small portion run into the actual full-on target. I had eyed a double the expansion, but it was a bit too much, and I think we'll get that tomorrow instead. So that's gold. Now, as for oil, we did we yeah we we got out 4 times on oil. Haven't even looked where it ended up. Let's have a look. Good. Yeah, it's okay. Now, oil did a round turn. So on the data, it shot higher and it started to come off. And I thought, well, that could be the peak formation for the day. And this is where I got in. So noting this coil, I actually micro managed this scenario on a 30-second chart. I was noting that it was actually coiling within the coil on the lower time frame over here. So I managed to I initially had my entry down here for a breakout on the 1 minute, but I noted that there was a coil in this section here. That was there's a coil here that I was micromanaging. So on the breakout of that, I sold. So I got myself a slightly better entry, a much better entry. And then I went back to the 1 minute chart to micromanage it again. It was a bizarre reaction, really. I mean, fundamentally, it's a complicated complex with the lockdowns in China and OPEC, and there's various macro um, variables in this. But just on a technical basis, I mean, for it to rally and come off and just bleed out for the rest of the day, really, and then turn course. So tricky one, really, but I managed to get what I wanted out of it. So um, there was that was the setup, purely technical. Given this price and balance, I thought, well, at least I'll be able to get something, maybe even to break even into this area of consolidation. The lows of the day was the target initially. So I started taking money off on the approach. Took money off here. Again, I took money off here when I can't remember what the rationale was behind that one. Probably okay. So just I think maybe a double take on expecting a bounce. Perhaps I can't quite remember. Um, Ahead of the cash open, I guess it was. Anyway, and then we subsequently moved down the correction, so that's great. Continuation. Now we were in at this point into a price imbalance. Sorry, sort of a demand area, a deeper demand area. In here, it was actually in here. So I took more money off, but I was thinking we could extend beyond the lows of here. This was the weekly low of last week. Last week's weekly low. So this was an area of congestion, and I started taking money off. And I decided on the double bottom of these pins that it would be a good time just to come out of this and I got out of here, and pretty good shout because it just reversed course for the rest of the day. So that was the play, and was taking money off. In hindsight, this was a good entry. Would have made a ton more had I kept the money, kept the trade on. And the same with gold. Would have made a ton more. First entry, all right, missed the mark. Second entry, really nice, excellent target for a 4 hour, just on one trade. And I think the oil was, if I'd left it at the, that would have been, so it would have doubled the money that I made today had I just stuck with, just left it, set it and forget it. But that wasn't the play today. So there we are.